Welcome to lecture number 6, students. Let's jump over to share. Today we will be talking, first of all, about the marketing budget. You can see that requires us, if we take the NASBITE test, to know about the budgeting process, reporting requirements, I'll explain, accounting procedures, and the cost of marketing and production. In the budgeting process, as we've talked about earlier, the key is you will first go to the sales department to find out their projected or pro forma sales for the upcoming year. And then from that, you will issue a pro forma business income statement. So let me look at this. Basically, I just made this up. If for the next year, we have to go to management and they have to decide how much money we're putting into each activity. I'm going to say, well, I went to sales and they're forecasting that we're going to sell 10 million. Well, I happen to know from past practice that 6 million of raw materials, labor, etc. will be required to manufacture that. So that leaves me with 4 million of gross profit. Then from that 4 million, I know that 2 million for overhead or SG&A. And so the things like everything from office workers, insurance, rent, etc., that takes me down to a $2 million income before taxes. I just did a hypothetical 21% tax. That takes me down to 2.58 million that the CEO will be happy to make because he is going to get a bonus. So again, we start with sales and find out what our revenue is going to be. Now, it's just unequivocally going to be difficult when you go into a new international market because you just really don't know what the new sales will be. Let's say, for example, you've been in one country in Asia Pacific, you're going to go in a second one, and their market is theoretically twice as big. Well, in year one, you might say, well, we hope to get the same sales as in the smaller market, but by year three, we hope to be up to the level. So it's just going to be difficult, but you have to look at potential market share, etc. Um, we already talked about going down the budget. And again, these are things you're going to have to do even if you're not in accounting, because you're going to have to be in the budgeting process for going into the international market. And like we talked about, you're going to have to, after you find out the revenue, the sales that are expected, you're going to have to then go back and do this math, subtracting cost of goods sold and selling general administrative. In selling general administrative, that is your marketing budget is in the selling portion of that, of course. Now, in accounting, you probably already learned that most companies have to follow what's known as generally accepted accounting principles. So be aware, be familiar with that term, not for the test, I don't think, but you just need to know it. And once you have your budget, again, this part's redundant, I apologize, but then we have to go to our cash flow or P&L, profit and loss, and see, okay, this is going to tell me how much money I'm going to have in each period to run my business. So even though I know the revenue, then I'm going to go down here and show how much money I'm going to have to put out to keep the doors open, a cash flow or P&L. So you will now be familiar that we have three basic financial statements types with which you should be familiar. The first is the income statement. We talked about that as a budget. That was a pro forma, which means not actual but projected. At the end of the year, you'll have an actual income statement which show what happened as opposed to a pro forma, which is just projected. Then you'll have a cash flow statement to allow managers to operate the business knowing how much money's coming in so they know how much money they can spend. And finally, especially for bankers and investors, at some point you're going to need to have a balance sheet that shows what your company's worth. And again, it's relatively simple math. What assets do you own, including receivable accounts, inventory, etc. Take away liabilities. Gee, I owe 500,000 to the bank that they've lent me. And what's left over is what the company's worth. Retained earnings is what they usually call it because it's retained within the company. Um, Now let's jump over to costs associated with marketing promotion. And again, it's just, I'm so sorry, but when you're jumping into new markets, especially international, you're going to have such a broad variety. And so you're going to have to do some more research than people would domestically and find out in this typical market, what are going rates for TV, radio, newspaper, whatever, social media. And of course, you've learned in marketing that there are push strategies and pull strategies. Let's say, for example, you have a distributor um, in Japan and he gets an extra 10% bonus if he sells over so much. That's a push. It gives him incentives to go in and do more advertising and to market and et cetera, et cetera. Conversely, pull, I'm going to go get on TV, internet, etc., and I'm going to try to pull the customers in. So a push and a pull. Just remember those broad concepts. Marketing mix. Let's jump into these one by one, shall we? You already saw the 4 Ps last week. Again, here's a good video to watch. It's not too long, and I think you should watch that, but talks about the marketing mix. In fact, let me watch it here with you. It's not terribly long. All right, let's stop. I'm going to stop share and then start share again over on the video. Let me reshare because I want to make sure that the share has the video sound. There we go. This time it will.
In a game,
especially in sales.
hands down.
So for me, email composition works.
The marketing mix. It's a combination of the 4 Ps: product, price, promotion, and place. When we talk about product, we mean things like the quality of the product, the design, the packaging it's sold in, and the brand. Price not only refers to the retail price, but also any discounts. Do you accept payment plans? Are there any specific credit terms if the customer has to borrow money to buy your product? Promotion deals with any advertising. Personal selling. Are there salespeople? Public relations, emails, anything that gets the word out. Place. Do you have a retail location or a storefront? Do you deliver? Can the product be downloaded? Basically, all distribution methods. Let's say you want to sell hamburgers. Great, but first you need to know your target market. Who are you going to sell hamburgers to? Well, hello there. Your target market will affect your 4 Ps. In this case, you'll want a very high-end hamburger. Consider a product that features truffles, which are super expensive stinky mushrooms. Oh, that sounds delightful. You're going to have to charge a lot because your cost will be high. $25. A good promotion might be an advertisement in Fancy Pants magazine. And a perfect place to sell the hamburger would be at the Polo Club. Okay, but what if we have a different target market? What about this guy? Peace man. This marketing mix won't work for him. Consider a vegetarian burger. You won't be able to charge much. You may even have to loan him money. Thanks, dude. Including good karma fries will encourage him to spread the word. And selling them in a public park would be a good idea. Okay, but what about this target market? Arr! Again, we should adapt the marketing mix. He spends a lot of time at sea, so waterproof packaging would be a good idea. He doesn't have any cash but has plenty of goats on board. Who doesn't love a free Viking helmet? Ooh. And you'll need to deliver. So there you have it. The 4 P's make up the marketing mix: product, price, promotion, and place.
All right, that was very simplistic. I'm hoping a touch humorous, but I just love those videos that gives us just the basic understanding, a framework, and from that we can develop more. All right, let's jump back into these slides, if you can bear with me. All right, we talked about the marketing mix. Let's next go marketing segmentation. Um, and the key is, again, we talked about this last week in lecture 5, but not all customers want the same thing. You're going to have to go into this market and segment based on specific marketing. I'm not going to sell Lexus to the same guys that I'm probably going to sell a four-wheel drive Toyota, for example. You can do segmentation based on various factors, including age, gender, race, religion, user preferences, etc. Here's a nice little video about market segmentation. I'll ask you to do that. Now, customer expectations. We've already gone over this, so I'm going to skip that. We did that in previous weeks. A nice video here as well. I'll have you pause and go to that, but that's a short video about how it became tailored to meet different market segments in a foreign market. Good. Helps you welcome back, helps you avoid blunders, cultural issues, traditions, norm, taboos, do's and don'ts. Here's a fun, but here's some resources that can help you understand these cultural norms and business norms that you should know going into a new country so you don't step all over yourself. All right, for some reason, these materials want us to talk about life cycle. Um, I don't think it's as important in the international context, frankly, other than you might be able to take a product and take it into a different market based on life cycle. I will give you an example. Obviously, this is the standard product life cycle. You start with the introduction of the product, nobody knows about it. You launch it, it grows, hopefully sales, maturity, big sales, and then it starts to decline in popularity. Well, some computer companies, for example, will launch and in mature markets, the US, the EU, Brazil, they will sell these sophisticated computers. And then 2, 3 years later, as it declines here, they might sell not used computers, but the 2 to 3 year old model in lower income countries. And so they're here. So those same computers could be sold and jump in on a new market because you're able to sell them at this older type at a much lower price. Some people do an annual product life cycle where Walmart, Target, you're selling a whole bunch of swimsuits in spring. They're going to use them all summer, but then you're not selling anything in the fall. Well, if I'm a swimsuit manufacturer, I'm going to sell in the southern hemisphere in what is the winter in the north and summer in the south. So think about your product life cycles, whether they're long term or annual. Let's see. We've already talked about modifications, but keep in mind you should be sensitive to colors, drinks. Any of you that have traveled to Europe, for example, or some Asia Pacific countries, very few countries will have sodas or drinks that are as sweet as those we use in the US. You're just going to have to adjust to different tastes there. You're going to have to translate words, don't use inappropriate words, etc. Here's some good sites when you start researching potential modifications necessary for your products to get into a foreign market. We've also talked about technical compatibility. In many countries, you literally will not be able to sell your product into that country unless you meet their health and safety standards. We talked about the CE. the European mark. If I'm selling iPhones in the US, I'm following, I don't know, ISO probably, and then there's I forget the name, but there's the electronic certifications here. Well, when I sell it into the EU, I'm going to have to get a different certification from a different certifying body, put it on the phone, and then to be able to sell into the EU, it would be the CE mark. So again, my point is when you go into another country or region, you want to make sure and look up what particular technical compatibility issues you may have, and if from marketing to altering the product, etc. A point that's made by the materials is obviously, I think it's self-evident, but if you're sending something by ship for it takes 30, 60 days to get there, you want to make sure you have robust packaging, have it tight so its theft is more difficult. Obviously, a long-term shipment overseas would be more vulnerable to breakage, theft, and damage. And so you might have things, and we do this in our businesses all the time, stronger reinforced box or crates. You might have straps or seals, shrink wrap to try to deter theft, containerized cargo, et cetera, et cetera. So these are themes that not just the product, but the shipping and packaging you have to think about. Again, when you're shipping into another country, you also have to have specific marking on at least the paperwork that attends the shipment and often on the product itself. Who's the shipper? Where was it manufactured? That's country of origin. What does it weigh? Number of package. These are things that you're going to have, whether or not it's hazardous material, you're going to have on your packaging when you try to get into another country. After sales service and support, I won't get into technical, but obviously, if you have let's say, an electronics product or something that needs updating, then you probably will have to have someone local in that country to provide that type of support. Okay. Maybe user training. Recycling in many countries, you are literally required by law to not only use materials that can be recycled, but provide either recycling facilities or pay a rebate, if you will, to the customer if they take it for recycling. It's not that way in the US yet, but it is in the EU in many places. All right, now we're jumping into more of a legal concept, which is called product liability. You guys may have seen this before, and basically, when you are selling a product, what is the risk of you being sued for that? Being sued for that. Your product causes an injury. Well, there's a few ways you can be sued. I'm going to ask you to pause and watch this video called Three Types of Product Liability because it's going to tell you the way or the manner you can be sued. Also, the video which shows a distinction among the types of tort liability. But don't waste your time at the beginning. Jump to 356 in the video. Let me explain a quick concept. If you're driving a car and look down at your phone and you hit my car, well, that would be known as negligence because you didn't really do it on purpose. So negligence, you were negligent. A second type of car crash could be you see your ex-boyfriend and you run over his toes on purpose. Well, that would be intentional, like an intentional tort. The third kind that they've set up is this product liability that we're talking about, that you can be liable for a bad design. In other words, you design an unsafe product, bad manufacture. Oh my gosh, I forgot a part. I forgot to put seat belts in the car that I manufactured. Or three, a failure to warn. McDonald's, I forgot to tell them it was hot coffee. Okay, so these are three ways that you can be sued for products liability. Interesting. You may be thinking, oh, wait a minute, especially in the US, everybody's so sue happy. I can't think of everything for which I could be sued. And I have a safe design, I think. I have safe manufacturing methods, and I in my warning, I put everything. Well, there is a legal concept, and I'll ask you when I'm done talking on this slide to just look up this case called it was the Paul's graph case, and basically it said your liability as a manufacturer slash seller, that is, and or seller, is that you are can be liable for things that you should have known. In other words, that were foreseeable. Okay. If someone, I do curling irons, and someone takes a curling iron and their sister's curling iron and tries to use it to melt plastic on an airplane and it starts a house fire. Well, theoretically, that's not a foreseeable use, and I would argue I shouldn't be liable for a stupid use of the product like that. So look at this video about foreseeability and legal liability. Welcome back. Now, you have often seen in many cases what's known as the exclusion clause, the disclaimers, the waivers. If you go to a amusement park, on the back of your ticket, or when you buy the ticket online, it's going to have a page of we're not liable if you do something stupid on a ride, or blah blah blah. When you buy products, it's going to say, we're not liable, da 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 da. You even see trucks full of rocks on the highway saying we're not liable, if you get within 200 feet. Well, that's just silly, frankly. If you're following a truck and they don't have the gravel or rocks or whatever covered and they hit you, no sign or disclaimer is going to be effective. The key to a disclaimer really is advising or informing your customers of a potential risk. And then you can later argue, wait a minute, they knew it, they signed it. And so, at least our liability should be minimized or mitigated. How do you address or stay safe so your company doesn't get sued and lose millions of dollars? Well, four ways. Remember product liability. Number one, you provide a safe design for your product. Number two, you safely manufacture a product. Number three, you warn of all the potential risks and give good use instructions. But number four, a lot of companies use product liability insurance. And because, if you're in business nowadays, getting some lawsuits is almost inevitable, especially if you're in what's known as consumer sales, retails. That means it's going into household. So insurance, your company should look at insurance. Now, when you're going into an international market, you better make sure your insurance covers sales into that international market as well. Because some product liability, it's usually called CGL, commercial general liability, or completed operations, but for our purposes, I'll call it a product liability insurance policy, may say this is only for sales within the US, for example. So you're the international expert in your company. You go to your insurance person and say, hey, let's talk about this. Look at our insurance policy. We're now going to go sell into Japan. Does our coverage include sales into Japan? Indemnification, that's a good term for you to use. It's sort of a fancy word for insurance, or instead of insurance, someone pays another one if something happens. Um, when you have a distributor, let's say you're the manufacturer. Well, your retail companies, your distributor, whomever, you often have to have what's known as an indemnification clause in your sale agreement, because they're going to say, I didn't design it, I didn't manufacture it, I didn't warn, I'm just selling the darn thing. And so often you'll be required in a contract to say, okay, I will basically pay you if you get sued. And that's known as an indemnification. Okay. Jump over to pricing. believe it or not, there may be legal regulatory pricing issues. Many countries have laws that prohibit excessive prices. Now, you might see it price gouging. If there's a flood, a tornado, or something, often there will be laws against retailers charging 10 times what they normally do for goods. That's an example of a law that prohibits excessive pricing. It's often invoked to essential goods, water, medicine, pharmaceuticals, etc. There's also maybe legislation that stops you from selling below cost or too low. Why would companies do that? To basically, it's called dumping. I want to enter into Japan. So I sell everything at 20% below cost. I drive out all my competitors. Then I have 100% of the market and I raise the price. So that's an anti-dumping law. You just can't go in and sell at below price like that. Price maintenance. You might notice when you go into Walmart, I don't know if they still this, but it used to say manufacturer um, suggested retail price, not retail price, but it used to be manufacturer suggested retail price, MSRP. I haven't checked in a Target or Walmart or anywhere lately. What does that mean? Well, that means when I'm the manufacturer in many countries, I can't force my retailer, my distributor, whomever, to sell my product at a certain price. That's known as price maintenance. And so, depending on where you are, that might be unlawful. So be careful of that. Transfer pricing, we already talked about that in a prior week, I believe. But basically, governments want to be able to get profits from you to tax. They don't want you to move all the profits offshore to a zero tax jurisdiction. So when you sell to an affiliated entity, it has to be a fair price. That's the bottom line. So I'd like you to watch this YouTube. It's a good instructive video on how to determine your prices to sell to affiliates so the IRS doesn't come after you. All right. Finally, environmental concerns. If you are selling a chemical, if you are selling electronics with hazardous materials in it, etc., you may have to have an export license to get it outside your country. You may have to provide for disposal or recycling in the country into which you sell. And some products are absolutely banned. As the time I'm recording this, for example, there are a lot of differences in the EU food market and the US food market. The EU food market being much more restrictive. And so, for example, just don't assume that you can automatically sell into there. Okay, that it is it for week 6. Thank you for your attention, and I will see you week 7.